Sorry for being a little late. We figured that we had to be there, but apparently it's there. So now we're all set. Today we're going to have a chat with Adrian and I. Well, you all know Adrian, I guess. But we're going to talk about the markets, the forward-looking case, Trump, all those topics. And for 10 minutes, and I don't know how we're going to solve that, but we would like to ask the audience questions or let them ask questions to us or to Adrian. Adrian, how are you?
I'm good, man. I don't know. I feel like
I'm also like
crazy.
I'm going to sit here. It's fine.
Okay, full disclosure, Michael and I are very good friends for many years, so it's going to be difficult for me to be serious in the discussion, but I'll do my best.
Well, having fun while the markets are bad is good, actually, right?
Yeah.
Anyways, how are you currently like seeing the markets, or like the past few months that have been completely different than any of the previous cycles?
Yeah. All right, so Trump, right?
Yeah,
Donald
that's
Trump.
where it started.
Donald Trump. The markets typically react best under democratic presidents, okay? And it doesn't have anything to do with my political beliefs. It's just a statistical fact that democratic presidents, regardless of who they are, in terms of personally or the country, they tend to be a little bit loose air on the monetary policy. They just, push the bills to incentivize the economies to grow a little bit more because they are a little bit more, call it equality-oriented, and that brings peace. And peace brings more or less uncertainty. Less uncertainty means better returns. So that is statistically speaking, the best U.S. kind of like a setup for the best market performance for the S&P, for Dow Jones, Nasdaq, and so on, which is where the stock market thrives, is under Democratic president and a Republican Congress, all right? So that is not the case right now. That is the case of Donald Trump's reign, where this is the second incumbent candidacy. And what he's done so far is he swung the pendulum a little bit beyond the regular amplitudes, all right? So if you imagine the market to be like a pendulum, basically, that it has a range of an amplitude that it kind of like swings, then what he did is it pushed a little bit more force, and he brought a little bit more chaos so that the pendulum kind of like swings more, all right? The extremes are more apparent, more evident, and as a result, you see a lot of uncertainty, and ever since Trump took on the chair, you're observing quite a decline ever since, right? Because of tariff wars, because of him, just calling the Gulf of America, Gulf of Mexico, this stuff, he's funny about it. And I know Greenland, of course, and Denmark, and then he says he's gonna take over Canada. And on one hand, most of the headlines, the moment you read them, they are funny, as in you have a smirk on your face, you smile, and you say, okay, this old man threw a nice joke. The problem is he actually means it, right? And again, I may be fan, you may be a fan, you may be an opponent against Donald Trump and so on. It doesn't completely matter because we don't change the markets, right? He has more control over the markets. And I remember back in 2017 and 18 when I was still doing like a lot of Forex. If you remember, if you go back to memory, those dates, then that was the time where Donald Trump was very active on Twitter, and he was, let's put it this way, putting tweets that moved the market. Mm-hmm. And he put out a couple of opposing tweets throughout the same day, and he swung the market left and right, up and down, not really changing much of the direction, but at the same time, there was a very quick effect, and I should say cause and effect situation where wherever he said was immediately reflected in the prices. And to the best of my knowledge, I might be wrong, there were a lot of people close circles to make a lot of money out of that. So I have observed nothing else this time, actually, right? He's just swinging the pendulum like he always does. He's just playing the persona that he always is. It speaks to his people, so I think what he's doing is overall smart, and in terms of high intelligence, of high accuracy of what he's supposed to be doing. Right now, I may agree or disagree, but it doesn't matter. right? As a reaction of that, the uncertainty is elevated. The pendulum kind of like swings a little bit more amplitude, more changes that erases a lot of gains out of the market. But at the same time, if it erased gains, and just like I was having the keynote, it was pretty much back to normal. We reset a lot of indicators. We have reset a lot of gains. That brings a decent potential for alignment with the overall strong seasonal case for April and May. So if we went down a lot very fast, probably we're going to go back a lot very fast as well.
Well, I mean, Trump has been taking a different route compared to the previous period that he was a president. Overall, a lot of people tend to have an opinion about Trump, but it doesn't really matter if you're active in the markets as an investor. You tend to be objective. And I kind of get the feeling that, or the understanding that if we would have never had the ETF for Bitcoin, I think we wouldn't have any new all-time high until date.
So
I think that...
You say, hold on, you say, so if not for the ETFs, we wouldn't have an all-time high, is that what you say?
Yeah.
Why?
Because I think that a lot of people have been betting on the 4-year cycle to exist, and it's still a topic that is very active. But I think that it's more driven by liquidity than the actual 4-year cycle, and there was some sort of overlap in 2021 after COVID. But if you look at the Bitcoin price valued against something that is adjusted for inflation, which is gold, it's still down 35% from the all-time high in 2021. So, to my understanding...
What is down, 35% you said?
So if you put the Bitcoin price against gold...
Oh, okay, the relative basis.
Then it's down 35%, which I think is
gold is up, like it just pushed free.
Yeah, it's up a lot, but that's a different topic. But a lot of people are questioning, like, should I look at the USD value? I think it's not relevant. It is looking at how your purchasing power, how your inflation keeps up. But if we look at this morning I saw a tweet with the global liquidity, and usually it breaks out heavily. It hasn't done that yet. So... in my thesis, a lot of people have been expecting a lot from Trump being in the office. He has been out there. He's been very vocal on Bitcoin last year, the conference. But with governments, it takes time. And in the meantime, crypto is still not regulated in the US. So all his friends can short the markets as much as they can, push it down, accumulate as much.
Or release meme coins, yeah?
Release his meme coin. Javier Milei was doing that too. So in that sense, I think that we technically haven't seen a bull market as of yet. I think it's good that there are so many people out here during such a terrible market circumstance. But if we see like the current momentum in the markets, how are you projecting that going into the next 5 to 6 months?
So I mean, I'm trying, of course, to have a little bit of the educated guess, right? I mean, when I try to fully and only and solely focus on my own opinions and my own thoughts, most of the time I get it wrong. So I prefer to at least glue to the facts to be just a little bit closer to the truth, or at least have a better chance for it. So that, again, like those S&P 500 again, ever since 1949, right? In the post-election years, it generates 17.2% annualized gain, as opposed to an overall, let's say, average out of those years, 70, 80 years, is 9-10%, right? And especially in the last 40 years, like the post-election years, which is exactly 2025, which is what 21 was, which is what 2017 was, which is where basically every single time we saw this massive surge in the Bitcoin prices and altcoins, and everything was pretty much crazy. S&P breaking new records and stuff like that, right? It is paired and coincides with the liquidity cycles. Again, that's true. This 4-year presidential cycle, to what extent it is self-fulfilling prophecy, or to what extent it is actually like an actual liquidity-driven event, or there are some other factors. Like, honestly, I don't care. It doesn't matter, because if the price goes up, that's okay, right? I don't care about the reason why it goes up too much. So having this strong records, this strong track record on the S&P 500, and having those strong correlation coefficient, with Bitcoin against Bitcoin, as in like 0.8, 0.87, 0.90 something, most of the time, well, you can anticipate that it's going to move quite similar than S&P, right? And then having those strong seasonal tendencies, again, averaged out over those 70, 80, 90 years at times, then you have quite a strong glue and benchmark to know what to anticipate, right? And again, this April and in May, they are a duo, like 2 months that perform very, very well overall, right? Everybody, like how many of you, raise your hand, how many of you have ever heard a term, sell in May, go away? All right? And there is some truth to it. It is derived from like where the stock market was still an outcry, kind of like loud shouting and then betting, on the physical floor of an exchange. And it goes way back, like I said. However, over the time with the computerization, with the internetization, with the artificial intelligenceization, whatever you name that, we're all bringing a little bit more efficiency. We're all bringing a little bit more participation in the markets, reinforcing those existing patterns. And then you have this human factor, that basically if you lose something, you go where you found it last time or where you had it last time, right? And the last time is exactly this 70, 80 years of those gains accumulated in that period. So if you take those April and May and October and November, right? That is basically what comprises 80% of the returns out of the entire year. So you have a fairly good shot that if you focus your time, you can plug off basically, any other time. But if you lock in, go deep in the trenches at those 4 months of the year, right? There's a high chance you're gonna participate in biggest kind of like part of any surge if that occurs, right? So you have those two candidates, like April, May, which I'm anticipating based on the historical records that they're going to do very well. Sell may go away again, since it is reinforced. It may see a decent drawdown at that time. Perhaps that's going to be another like 20-30% correction. I'm expecting at least 2 more of those the closer we get to the peak. Because like if you imagine a bull market, to be a proper roller coaster, like you go up and down and those heavy, steep kind of like, rides, then it feels like right now we are right ahead of the massive incline, right? It's like the last moment where you haven't seen this steep as kind of like an incline, like, in 21, like, in 17 and all this stuff, right? And this is where the mania is. This is where the mainstream joins. This is where, everybody talks about crypto. This is where, we don't have that just yet.
Mm-hmm. No, I mean, it kind of in line with what you're saying, it's, Mark Twain has said, history doesn't repeat, it often rhymes.
Who said that?
Mark Twain.
I thought you said this.
No, I'm tuning it a lot, that's why. I think that the fact that right now the sentiment is so bad is because people have been having so many expectations and have been over-investing with overconfidence, expecting something to happen again. It is going to happen again, however, you need to broaden your entire horizon of when it is going to happen. Because betting on one horse, which is the 4-year cycle, is ridiculous to do so. In my opinion, and I know you are very data-driven with the quarters on when you're going to sell, but I'm not really into time-based portfolio management. I'd rather do it based on the portfolio that I have and the prices that I see. But in that sense, I think that right now we are literally on the edge of having that spark where maybe even today with the Fed hopefully becoming a little bit more dovish. Bank of Japan has not been doing any rate hike. Yeah, it's today. And this morning Japan has not been doing any rate hike, which is a slight positive signal. So in that sense, I think that we're going to have that big sort of bull cycle that we all wish for, because primarily it's being driven by institutions and not by retail. Institutions are going to come in, make the bridge between TradFi and DeFi and all those things. But if we talk about that big famous bull cycle that we experienced 2 times already, what about the altcoins? Why are they getting completely hammered? And yay, also meme coins. But why?
There are no new people, man. Like we are all sitting in the same pothole, basically, same people, and we are just trading against each other. Like there are no new people, and that's the point, right? The mainstream hasn't properly stepped in. I mean, first sign of that we had at the meme coin top, right? I mean, we had some, what do you call that, like a reference that put me back in 2017, where whatever you bought basically was going up, and everybody like, okay, this guy made 50 million out of $2, right? Or this guy made 170 million in 5 minutes because of whatever, buying some insider shitcoin, doesn't matter, right? Of course, most of those people are probably going to be prosecuted by SEC because of insider trading and stuff like that, consequently violating all of the SEC kind of like, regulatory aspects. So they're probably not going to run away from it, and even worse for them, it's now on the blockchain. But leaving that part aside, it exactly is this driver, that says, okay, if this guy made 170 million, I can fucking do it myself. And most of the market thinks this way, which is why, they try to copy paste. Like, we have this tendency overall as a humankind, right? And that we try to anchor strongly to role models, like to influencers, to politicians, to actors, and believe blindlessly what they say, okay? Which is why having so many scammers in the space, like I've lost multiple accounts, like I've made all sorts of possible mistakes. Again, I got exit scam, rug pulled, I invested in my friend's project and they took it away and they used it for drugs and I never heard back from them. So when I say it, that I made a lot of mistakes, I mean it, right? Mm-hmm. And it's because we do not verify. I mean, having an opinion is all right. It's fine to have an opinion. It's fine to go take a megaphone and speak it out loud, right? However, it doesn't remove this responsibility for the decision of the person to listen to it or not, right? And most of us have this tendency to automatically believe whatever we read, whatever the media says, whatever the headline is, without properly digesting into the whole thing. Because just maybe someone is talking about taking lifetime risk in one trade, all right, and making it, but like, if I tried going 10% of my portfolio every single day just because someone won a lottery, that person that I know, for instance, well, it's gonna get me wrecked, all right? And the fact that it worked for someone else, it doesn't guarantee that it's gonna work for us, because we have different experience, different risk tolerance, different money to play with, all right? And this is the reason why the altcoin cycles always blow up, right? This is the reason why those herding instincts create those prices of altcoins just spiral up crazy and then they fucking collide like crazy, like 80-90% or so, right? And that is common again and again and again and again and again. And those meme coins that happened, you can argue it's part of the altcoins. They were the first kind of like a, what do you call it? It's not a hummingbird. I think it's just an indicator, like an early indicator that, okay, there is hope for us yet. It's probably going to happen. It was like a little bit of like a starter. If you go to a restaurant, you order a starter, that was probably the starter of an actual altcoin season. And of course, again, every single time it's different. Every cycle is different. And at the same time, they're pretty similar.
Yeah, I think altcoins are very hype driven. To be honest, meme coins, in my opinion, are the new phrase for altcoins, because I think saying altcoins for most of the Web2 projects and founders out there that are really trying to build something really cool, it's just a company. So it's not really an altcoin, in my opinion. But then the topic that you touched...
It's good if it has a company, right?
Well, it's a different topic, but I mean, there are a lot of Web2 founders that are really building something in terms of great tech, but they don't have the actual good partners in Web3, and then they cannot succeed. So that's a different topic. But when we talk about the sort of sentiment and people investing into altcoins, people need to realize that it's very tricky to invest into altcoins. I'm very open and transparent with my portfolio on YouTube and Twitter, and I've been too early. I was also betting on the markets to go up earlier. However, ultimately, it's your own responsibility to take the decisions that you take. So there is no way that I'm going to be saying, well, you did it for me. No, I've actually pulled the trigger to invest into altcoins. And lately, the sentiment has become as bad that even multiple friends of mine and myself have received death threats that we need to go to the police to actually get more safety. So that's kind of where we are in terms of sentiment. But ultimately, if you would like to have those maximum gains that you see on social media from someone that has been going from $1,000 to $1 million, then you need to realize that 99% are losing money. And you need to risk it, which is you need to accept that on multiple hurdles during that cycle, you will drop 60 to 70%. That's just part of the game, and that's how you should be investing into altcoins.
The problem is that most of the people, they don't have the risk tolerance for it, right?
No, so they shouldn't.
And you only kind of like come to the conclusion when it's too late that, okay, I shouldn't have lost 70%. I'm actually not okay with losing 70%. Only after that happened, right? But
That's
before
true.
that, and again, I'm speaking this from my own perspective because when I was starting like full time, I mean, I had the initial investment capital from myself. I was making good money at that time outside of the market. So, I mean, I could afford losing stuff like this, right? I mean, when I joined, I'd made like 10x, 20x on my invested capital. Then the summer 2017 came through, it got destroyed, absolutely rocked like 90% or so. And I'm like, okay, I still have money. I mean, this is how it works, I started developing and kind of like digging, okay, why I made such a dumb decision. And altogether, having those 60, 70, 100% drawdowns, like this is coded. This is like you have to take it into consideration. You have to understand that this max Bitcoin is capable of losing 66% on average in bear markets. On average, you had 90% drawdowns. You had 85% drawdowns. Last cycle, you had 75% drawdown. Okay, 69 down to 15.5. And if you ignore this, then you're only gonna wake up that it's actually bad after it happened, and then, well, pretty much it sucks because you just lost money and you're not okay with it. And that's the problem.
It's actually funny. It's all about reference and your framework. So we have been in the markets for a long time, and I actually discussed it with a friend, and we discussed of going risk off. And for us, going risk off is going into Bitcoin. But if you talk to someone that's 60 and you say, well, yeah, so my risk off is Bitcoin, they're like, are you a lunatic? Anyways, I think the idea was to ask the audience questions, but I don't have a microphone, so I don't know. Oh, there's someone. All right. Get the lights turned off a little bit, so then we...
It's going to get dark if they turn off the lights, man.
Yeah, well, I can't see anything, that's why. Anyway, if you have any question that you would like to ask to Adrian, please raise your hand, otherwise we'll just continue. Oh, there we go.
Don't give him
this is Matthew.
That guy.
This is...
So this is my question.
Don't talk about golf.
Talking about the ETFs and institutional capital, obviously the ETFs have brought a lot of capital from Wall Street, which has its positives and negatives. And the negative of that potentially could be that a lot of hedge funds who are buying the spot Bitcoin but shorting on the futures market with the cash and carry trade between the difference in the price and taking the yield on that, do you think that the current drop of 30% or so is hedge funds unwinding on those positions as it stands?
That's the difficult, you take it.
Well, first of all, I think it's a good point that there's a tweet going around with the net short position of asset managers on CBOE on the ETH, on the futures. That is not an actual net short. That is because what Matthew just be mentioning, they are just long and hedge it on a short to make that like, what is it, 8 to 12% a year? I don't know if that's the actual...
Disgusting. Disgusting. 8%. You
if you have a billion and you make
8%, like what is even 10%?
If you have a billion, it's fine. But I don't know if that's the actual reason. I think that a lot of rebalancing has been taking place with the institutions based on the uncertainty that Trump has been injecting into the markets, and that's a trigger. And you should realize that the amount of supply that is open on the markets is super low. So if the supply on Bitcoin and on ETH is just going down, the fluctuations of volatility are going to be increased, because if an institution unwinds its positions, it's a big impact. And that's why it's even heavier on the altcoins both ways. So it goes up and down in that sense. So I don't know if that's the actual reason, but I think that the correlation between gold going up, more risk-off appetite, the yields still being very high at this point, that is probably the primarily reason that there is so much uncertainty that institutions need to go into more safer assets. What about you?
Do you know that most of the hedge funds are unprofitable, yeah?
Yeah, they are. Yeah. Just like any...
So which is why most of the hedge funds, like because of those human factors, that they often, like, all right, we are talking about hedge funds, Class A and hedge funds, Class B, right? As in, everybody these days apparently you go and ask and they are venture capital, but they are not licensed, they are not regulated, they are not anything basically. They just take their own friends' money and invest them without any care or any license for it, which is pretty much illegal, let's face it this way. So everybody apparently these days is a VC, is a hedge fund, but all they do is literally lock up in a basement and they just pretend, all right? So, which is why most of the times, if you take all the hedge funds into consideration, are actually deposit signal, right? Quite often they are the actual like reverse signal, and just like you would have with the commitment of traders, for instance, like these COT reports, which is where you have the the banking sector kind of like comparison against the retails and their exposure and so on. This is lately literally where we've been the most bearish ever. Mm-hmm. I mean, the put and call ratio not even the ratio, but put option volumes was the biggest ever. Now, bigger than COVID began in 2008 and 9, right? It's the biggest ever. This is the most bearish the retail market has ever got on the stock market, on S&P put options, all right? And because of those herding instincts, the majority in the extremes, and that is an extreme, it's the biggest ever, the majority in the extremes tend to be wrong more often than they are right, all right? So you can actually reverse it into a positive signal. Then the actual net short, kind of like an advisor, financial advice, like the number of the financial advisors actively pushing you to be net short is also the biggest ever, right? Or at least the biggest or comparable when it was with the worst crashes in the last couple of decades. So all in all, there is a culmination of this incredibly high, big bearishness, uncertainty, and stuff like this. And at the same time, all the trends are moving up. Mm-hmm. All right, so I'd say we may take it as an actual reverse signal at this particular time.
I think if you rewind to time and you say the past year has been disastrous for altcoins and for like most of crypto, I think if you go back a year and ask people their expectations, it's the opposite of what they were expecting. So if you go on the streets or ask people here, then I think 90% is going to be really bearish for the upcoming year because of past experience. It's always the opposite. So anyways, because of the time, I'm gonna ask or see if there is someone having a question. I don't see the mic at this point.
You're not gonna see it. Don't even pretend you're looking.
Well, I'm trying to see them, that's why. Oh, there you go.
Oh, yeah. Thank you so much for the time. I just wanted to know how long after the how long after the Bitcoin top we might see the altcoin?
I think that is pretty much based on previous cycles where you need to see Bitcoin run first and then liquidity cycles through the rest. Ultimately, I think it's all about confidence, and I think it's all about the liquidity and the risk-on appetite that we see. So once Bitcoin stabilizes and we see the S&P going back up, the dollar continues to go down. Actually, the dollar has seen such a big drop in the past 2 weeks, which we only have seen 3 times in the past 11 years. 2015 was the cycle low, 2020 COVID, and 2022 during FTX crash. This is the 4th time. So the return after that event is super positive based on the fact that confidence becomes better. So usually, if Bitcoin starts to go back up from here, we don't know from where, that is the period where altcoins start to do really, really well. I'm just not convinced that we're going to have that like Bitcoin first, ETH, then the rest. I think it's going to be very selective and it's going to be very narrative driven, but it comes down to the risk on appetite that the markets are usually good at. Go ahead, I'll give you a few seconds.
Yeah, so actually, hold on. This is an easy thing to portray, right? So I've got a coffee here, I'm not gonna pour it. Although imagine you have a bowl of, I don't know, cereals, like a Cheetos, something, doesn't matter, right? And what are you holding in your hand is the milk, coffee, whatever, and you wanna fill it in your bowl, okay? So what's gonna happen is like this liquid is liquidity, all right? Bitcoin is a vessel absorbing this liquidity, that is the bowl. And once you pour it, right, and you pour more than the vessel can actually take, it starts spilling on the table, right? I'm not gonna see it, but like you can imagine. It starts spreading equally over the table, and the table is another vessel, right? This is the place of altcoins to exist. And only after Bitcoin bull, the vessel starts overflowing, you're gonna see the capital basically spread out elsewhere. Until now, 70% of the crypto capital liquidity is in two coins, is in Bitcoin and Ethereum. 60% and 10% dominance. The rest is all the hundreds of millions of other coins, right? So basically, you only have two strong coins picks right now. And it's only after this whole vessel, this ball literally starts overflowing, right? With the liquidity, with confidence, with positivity, with bullishness, and with everything else around, people making money. Only then can you see an actual altcoin. And like, we can make a guess if it's gonna take a week or a month or two. Like, if we were to peak, my anticipation, I might be wrong, my anticipation is that if we peak either Q2, Q4, so it's either somewhere mid-May through June or October through November, a month later, you're gonna see the proper out season because the bowl is overflowed, right? There's an overflow, there's a lot of excitement, a lot of capital. Everybody's made money, they want to place it somewhere else, and this is gonna be the chain reaction for the actual altcoins.
All right, I'm gonna ask you one final thing. I need you to answer in 30 seconds. I know we can go on for a few hours, but
Give it.
If the audience is listening and they have a portfolio in crypto and they feel like they are overwhelmed with whatever is happening in the space right now, what piece of advice can you give to them for the upcoming period?
Follow Crypto Michael and follow Crypto Caesar. That's my advice.
Okay. Anything else?
No.
Well, then I'll say follow Adrian as well. And I think zoom out is the best sort of advice that I can give to you. Develop a skill, continue to learn, and just chill out, touch some grass, have a broader horizon, and you'll be fine. Thank you, Adrian. Also follow him. Thank you guys for being here during this fireside chat. If you have any questions, I'll be walking around. Adrian will be walking around. Happy to answer all.